It's the killer combo sending shivers through homeowners everywhere. Falling house prices and rising interest rates. A clearer picture emerging today of Australia's property market slump. For what seems like an eternity, Australia's property market has been a seller's paradise. Sold! But today, further signs the bell may be tolling for Australia's housing bubble. New data from CoreLogic revealing national property prices have fallen 0.6%. That's the second month in a row we've seen a decline, and that trend is tipped to continue.
This is really a continuation in the slowdown. So chances are next month we'll see an even larger drop in housing values, and it will probably become more broad-based.
Major drops of 1.6% in Sydney and 1.1% in Melbourne drove the national drop, while Brisbane flattened out at 0.1%. Adelaide, the only major city recording a growth rate above 1%.
I wouldn't be surprised if we do start to see more of the capitals recording a negative month-on-month movement as we move through the second half of the year.
It comes as the banks continue to hit mortgage holders where it hurts. NAB today following CBA's lead and hiking its fixed mortgage rates. As the Reserve Bank prepares to lift the official cash rate next Tuesday, economists predicting another supersized hike of 0.5%.
Financial markets are still suggesting we'll have a cash rate with a 3 in front of it by the end of the year, and maybe somewhere around 3.7% by June of next year. Most economists think that's probably a bit bearish or pessimistic, but time will tell.
So with prices in decline and no relief in sight, just how low can the property market go?
Well, Evan Lucas is the Chief Market Strategist at InvestSMART and joins us now. For buyers, Evan, who might have just bought right at the top of the market, who may or may not be TV presenters, who may or may not be named Hamish, should they hypothetically be freaking out right now?
No, Hamish, don't freak out. It's one of those things that we all
have. That's the news
have.
I wanted this Friday night.
Don't freak out. Look, the argument to that question is that there's never a time to choose the top or the bottom. So I'll put that for you there, Hamish. I understand that obviously right now, if you did get in at the end of 2021, seeing for the first time in a while a housing market that is in a little bit of decline, and it is a little bit of decline. We need to put that out there. Yes, Melbourne and Sydney are getting all the headlines today. You have seen them over a 3-month average, declining between 2 and 1.5% for Sydney and Melbourne respectively. But it's a cooling. I think that needs to be pointed out quite clearly. We saw a lot of the data suggesting that what was happening through the end of 2020 through 2021 was not sustainable. Remember, housing markets were growing at 1% per month, not per year, not per quarter, per month. So that was unsustainable to see that, and that was always going to be the argument anyway. The catch is now we are getting a slight slowdown in what is going on supply side because interest rates are coming. And there's no doubt, looking at what we saw from CoreLogic today with their data, but also from Property Plus, they are saying all the same things, that there is starting to be signs that the increase in interest rates is starting to hit demand. So suppliers are asking the question, do I put my property on the market right now? Maybe not. That was the other trend that happened today.
So with housing prices declining, is this actually good news for first home buyers? So
the question about that end that is really interesting is that you are still seeing signs that yes, is the answer. So first home buyers are actually being completely unperturbed by what's happening with the RBA raising rates. You are still seeing that they are probably dominating the market. It does mean that there could be a scenario where with less demand coming from particularly investors and also those that may have stretched themselves in the past being out, they can actually start to find that the price they're seeing on their phone is actually the price they might get on the day at the auction. So that's the other positive from that question is we are starting to see first homeowners that actually not only know the price they're probably going to be able to pay, but getting it, which is a real positive thing.
Evan, I know you're not going to give people explicit advice on their mortgages on television, but it strikes me that there's probably two groups of people that are watching that are going to be most nervous seeing all of this news. That's the people that are on variable rates already and the people that locked in at low rates during the pandemic but are coming off those locked in fixed rates pretty soon. How do people go about thinking about this? Do you try and lock in at the rates that are available now that are fixed but don't really look very good?
You should always be going to your bank and asking straight out, can I get a better rate? Because I promise you, you probably can. You don't even have to necessarily have that better option because the ability now to move your home loan has never been easier. You know, breaking fees and all that kind of stuff have now been cracked down on. Banks are in a huge amount of competition. They'll actually probably pay you to come across to cover that fee. Fixed rates, in terms of where they currently sit, they are now probably, unfortunately, gone for those coming off them. So it's the variable rate that I think that you should be looking at from the point of view, go and ask your bank. Yes, move. Yes, rates are going up. But if you can get your rate down now to a lower rate than you're currently paying, if interest rates go up, which they will, at least you get back to where you are. And it gives you a better position to start. It's not the answer. It's not perfect. But it means that you are trying to give yourself the best chance to get as much money in your pocket rather than the bank's pocket.
All right, Evan, thank you so much for your time.
Thanks, guys.
What I reckon makes it even more confusing at the moment is that, we were being told by the Reserve Bank, don't worry, rates won't go up for quite a bit longer. Now they suddenly are. And so many people in different bits of the market, whether they're trying to get in or make sure they're okay where they are not quite certain where to look for that advice.
And if you're locked in at like 1.9%, and as we just heard, at the end of the year, it's going to have a 3 in front of it, the interest rates, it's scary times.
I just think it's never a good sign when the big advice is to go into a bank and just be like, please.